Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, we're having an update. Dow's up about 100. NASDAQ's up about 50. All right, now where's the S&P? Of course, we're right at 4,100. Now, we've been stuck there for a long time, several months, but I do think that we're days away from a breakout. Now, which direction do I think the breakout will be? I think it will be to the downside. Now, why do I think that? Well, a lot of people compare this market, the stock market we're in, to the crash of the Great Depression. Now, I got to put a disclaimer on here. If you don't like talking about the Great Depression, this might not be the good video for you. But this market compares a lot to the Great Depression. We've had the initial pull down, and now we've had this relief rally up, rally off the October lows. So the October lows in the NASDAQ, we were down about 30%, the S&P down about 20%. We're rallied off of these lows, right? And this rally's gone for about 7 months, right? From October till now. And now I think we're going to continue the downward trend, and I do think we're going to take out those October lows. Now, in the Great Depression, the first bounce lasted about 5 months. This bounce has lasted about 7 months, a little bit longer. Now, in the Great Depression, it came down hard. It crashed hard. Do I think this is the crash? No, I do not. I think we're going to get a pullback about 20%, and then I think we're going to have another rally up before the big crash. Now, we got this thing hanging over us right now called the debt ceiling. And I want to talk a little bit about that before I get into the real estate market. But the debt ceiling's really just a math problem, right? All right, so look, here's the situation. We got about 32 trillion in debt. Now, they're going to raise the ceiling. We don't know how high, but let's say they raise it to 35 trillion. Okay, of course, we'll probably hit that later this year. We're really rallying up, right? In the last couple of years, we printed almost $10 trillion. Okay, so the debt ceiling's going to be hit. We're going to raise it to 35, let's say, and we're going to hit it, right? All right, so we bring in about $3.5 trillion in tax revenues. Now, right now, interest rates are about 5%. So it takes about, this is just math, takes about half of all of our tax revenues just to pay the interest on our debt. Now, could the interest rate go up to 10%? Well, actually, it could. Look, we got inflation still running hot. Now, the government will tell you it's around 5%. I'm telling you it's still up around 10%. But inflation numbers still hot, and if they want to battle inflation, they're going to have to raise the rate higher. Now, could it get up to 10%? Well, let's say it did. Okay, you may say, but Mike, it's impossible, cannot get up that high. Well, I think it can. All right, so if it's at 10%, we got 35 trillion in debt. We bring in 3.5 trillion in tax revenues. Well, it would take 100% of our tax revenues just to pay the interest on the debt. Now, do you see a problem yet? Well, we got $100 trillion in unfunded liabilities. These would be Social Security, Medicare. Now, let's say we just decide to fund a third of those, okay, which would basically double that debt from 35 trillion to 70 trillion. Now, at 5%, that would take 100% of tax revenues just to pay the interest rate. But let's say interest rates go up higher. Let's say they hit 10%. Well, that would take 200%. Not only would we have to pay every dollar we bring in taxes to pay off the interest on our debt, but we would have to double it and print another 3.5 trillion. That's just to pay the interest. That's not to fund the government. That's not to fund all the programs out there that the government runs. The solution, of course, is to shrink the government. But of course, that's not going to happen, not as long as we keep voting in the people that we're voting in. They want more power, not less. So we have a big problem with the debt ceiling. Yes, I do believe they're going to raise the ceiling, but the problem's not over. We have a guaranteed debt crisis coming, a guaranteed financial crisis. Right now, we got We got the banks. The banks are still in trouble. They're still falling. The money's being pulled out of them. There's bank runs, right? This is just a big Ponzi scheme. There's no way the debt will ever be paid off. It just won't. It's not. It's a Ponzi scheme. And at some point, the Ponzi scheme comes to an end and everything comes crashing down. So when I talk about everything come crashing down, let's get over to the real estate market. Man, I'm going to upset some people today. Hey, okay, so there's this article come out, right? Basically, it said that sellers are quiet quitting. I don't even know what that means, quiet quitting. But a lot of sellers are not putting their homes on the market during this springtime selling season, right? Okay, so the new listings are down about 25% from what they were last year. People won't put their house on the market because they want to get what Billy Bob got, and they can't get those prices yet. But they think the Fed's going to reduce rates, and the house prices will go up to what Billy Bob got. Now, that's not my take. I don't see it that way. Now, the article did go on to say that house prices are going up, right? Since last week to this week, they went from $445,000 to $449,000. Okay. That's in 1 week. 1 week they went up $4,000. Now that just means that a more expensive home sold as opposed to maybe last week a lower expense sold. But here's the thing. It's funny to me that they're comparing now week over week. Why? Because they can't compare year over year anymore because year over year prices are down. 95% of the metro areas in the United States are down year over year. Okay, that's just a fact. I mean, you can refute it, but that's just the way it is. But here's the problem right now. Here's what's going on. Okay, so basically, the sellers are feeling that their rate stuck, right? They got the 3% rate, and now rates are up at 6 or 7%. So their rate stuck, right? They're stuck in their starter home. This is become their forever home because they can't sell it. They don't want to upgrade. Now, my first starter home, I wouldn't have been happy living there my whole life, but a lot of people have bought these starter homes and they're stuck because they can't trade up because it'd be too expensive for them because the rate would double and the price would double. Most people can't even afford the home that they're living in now, let alone upgrade to a bigger one. So they're stuck in their starter homes. They're rate stuck, if you will. Okay. All right. So anyways, the U.S. housing market is pretty frozen over. Right now it's frozen over. No one can move. No one can move, right? I mean, the United States used to be a mobile society where people would move throughout their life to different areas, but now everybody's stuck. Everybody's frozen, right? Because they can't sell their house because they're stuck there because, well, they're rate locked in. They're locked into this low rate. All right, so here's the thing. It's kind of funny. You read this article. I get a chuckle out of this. But anyways, there's rate envy now. Rate envy. Okay, so in this article, you get the comments and everybody's comparing what rate they got. I'm locked in at 2.9. I'm in at 2.8. Oh, I got you all beat. I'm locked in at 2.7. There's this rate envy, right? Right? And the other type of envy is this equity envy. Oh, my house went up 200,000 since I bought it. Well, Zillow says mine went up 300,000. Hey, I got you all beat. Mine went up $400,000 since I bought. So there's this rate envy, and we got this equity envy. Everybody's comparing this, right? Now, you mark my words, a year from now, you will not be seeing comments like this, right? Okay, so you will not be seeing it because what's happening now is people claim they're never going to sell their house again because they're locked in at this low rate. So what's happened now is the loan, the mortgage, if you will, has become the asset, and the house is going to become the liability because that house is going to become a big liability as rates start to go down. Now, what's going to freeze up America? What's going to make us start to move again? Well, most people in the comments say it's going to take about 30 years before the market gets unfrozen because that's how long it takes to pay off all these mortgages, and then they can just sell their house and then buy another one for cash. There's still cash buyers out there because they don't have to deal with the 7%. Now, that's one way that we're going to get unfrozen, right? Well, I think there's going to be another way that we're going to get unfrozen. We're going to watch the house prices come down. Now, during the Great Depression, people could not get a loan, but yet house houses still sold. They still sold. Well, it was only cash buyers. And if you saved up your money and you had cash, you could get some really great deals in the Great Depression. Amazing deals, but the prices came down. They came down a lot, okay, and they're going to come down a lot again, a lot more than they came down in the Great Depression. And the Great Depression, they only dropped 25 or 30% because people did not have loans that they have now. Today, everybody, 80% of people that buy a house, they buy them with loans, right? They put out, they get a loan and they buy the house. Well, these mortgages are debt assets, what they made the house. In the Great Depression, most people paid cash. At best, you put 50% down, you got a 5-year loan. That was what the average person did back then, or they paid house, but it paid cash for the house. In the Great Depression, as the prices came down, there were only cash buyers because no one was lending money anymore. Now, what's happening today? Well, the banks are starting to have a credit crunch. They don't have the money to lend anymore. The regional banks are falling over one after the other. The regional banks are going under. So what happens? You get this credit freeze, right? And only cash buyers are going to be available. Now, some cash buyers are still out there buying right now. The number of home sales are down about 30% on volume year over year. But you're going to see these prices start to come down. They're going to start to come down. Why? Well, because it's only going to be cash buyers. So this rate envy, you're going to be sitting there going, yeah, I got locked in at 2.9. Well, I'm in at 2.8. Well, what'd you get locked in at? Oh, I'm at 1.5 million. What about you? Well, 1.2 million. But this equity envy, the equity envy is going to go away. And it's going to be interesting. Now, people think I want this to happen. I do not want this to happen. I have a lot of equity in my house, right? And it's going to get chopped in half. I am a real estate broker. I make my money selling houses. And right now, houses aren't selling because of this rates are high. I agree, rates are high and people are locked in at this low rate. Okay, but this is going to change. Prices will come down. This rate envy is going to stay there, right? Because that's your asset. But now your liability where you're locked in at 1.5 million, 1.2, this equity that you have. See, people feel very, what's the word? They feel very euphoric. They feel very rich. They feel rich right now. And this is the good times, right? Because you can go on Zillow and see how much equity you have. Well, pretty soon you're not going to want to look at Zillow because you're going to see how far underwater you are. So people are not going to have this equity envy anymore because it's going to become negative equity and people will not talk about negative equity. Right now it's fun to talk about, hey, I made $200,000 on my house. Hey, I made $400,000. I got you beat. This equity envy is out there right now, but it's going to shift as these prices start to come down because there's only going to be cash buyers because the mortgage market's going to freeze up when we're in this midst of this financial crisis. People don't want to talk about this, but this is what's going on. This is what's happening right now, right? Okay, now, basically, as the prices go down, yes, you're going to be locked in, but you're going to be locked in with a lot of negative equity. Now, some people that are smart are going to start to sell and they're going to get out. Now, Billy Bob, he was the genius. And now I know in your area, prices are still going up. But you see, it's not normal for prices to go up 20% a year, 20% a year, 20% a year. That's not normal. When it goes up that fast, it's going to come down even faster when it happens. Now, I get it. I'm not right. Yeah, look at, I got, I'm getting a lot more views nowadays. But you know why? Because I got haters now. Haters love to watch the show over and over again. Here's some of my favorite comments from the haters. You're going to love this. Okay. All right. So one of the guy, his comment is that this guy is just trying to scare you into selling your house so he can get the listing. He's a real estate broker. broker. He's trying to get the listing by telling you houses are going to come down. He's hurting all these people. These people could have bought houses. They could be making hundreds of thousands of dollars. They could have that equity envy that people have, but he's hurting everybody, right? Because he's telling them don't buy a house. Now, I think it's still a bad time to buy a house. Look at, in 2020, you could have bought a $300,000 house with 3%, right? Okay, which was probably pretty good. But okay, they'll probably play out all right. But that same house now, 500,000, that's 7%. I think it's a terrible time to buy a house. But that's just because I'm scaring all the people. They're going to go out and sell their house now. And they're all going to call me up and give me the listing. I love that guy. That was so funny. Anyways, I made a comment. He took his comment down. I wish he would have left it up there. But anyways, some of these haters, they're great. Now, I got a favorite hater, my favorite one. I'll tell you. I'll give him a shout out. Jacob, I love you, man. Anyways, Jacob, he doesn't make a comment himself, but he comments on everybody else's comment and just tells you what an idiot I am, that he's been watching my channel for over 2 years, and I say the same thing every show. I don't think he's ever missed a show. I think he watches every show. I really do. But I love that. He's responsible for about 10% of my comments, so he's helping the channel to really, really grow. I mean, you get a lot of interaction on the comments. The algorithms kick in. I'm getting a lot of views because of the haters, man. Well, anyways, you guys know that I love you, and most of you are very supportive. All of you, not just my haters. I love everyone that watches my show. But anyways, this is just fascinating stuff to me. I just get excited when I get a lot of haters. It's funny. Anyways, I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? It's a Wednesday, everybody. Get out there. Have a great Wednesday. I want to talk to you all again real soon. Hit the subscribe button, especially if you're a hater. Hit that subscribe button. Bye-bye now.